morning. Welcome back to the Retirement Report. I'm Hank Parrott, your host. Joining me today, my good friend, special guest, Dr. Friday with Dr. Friday's tax and financial firm over in Brentwood, Tennessee. She is the tax expert for individuals and small business owners. In particular, small business owners, you got to deal with payroll, you're running a business, you've got, a lot of different tax liabilities that you have to be concerned about, payroll taxes being one of the big ones. So if you need some help with that, give her a call, and we'll give you, you can call my office, you can call her office. Our office number, I don't know if we have it on the screen, but 615-367-0819. You can call my office at 615-376-5325 if you'd like to get a comprehensive plan done for yourself, specific to you, personalized plan, which will include talking about things like, is a Roth conversion a good idea for you? And we can get, Dr. Friday can join us in that meeting, though this time of year that might be by phone, busy time. But if you need some help, we'd like to get a second set of eyes on ways that you can help reduce taxes as you're taking money out of your retirement accounts, whether a Roth conversion is a good idea for you, all the different things. Comprehensive planning is dealing with your income, your expenses, your assets, your liabilities. It's factoring in for taxes and inflation, rates of return on your money. Did I miss anything? I think I got it all in there. And there's Social Security. This is one of the things too. We help you with the decisions you got to make. When to take Social Security. What about how do I manage taxes on my Social Security income? Is it better to take it at 62, the earliest that you qualify to take it? Maybe 65. Maybe you're going to wait and retire when you qualify for Medicare at 65 and start Social Security maybe at that time. Maybe during your full retirement age, 66 to 67, or age 70, the latest you can delay and still get any benefit from doing so. Lots of complexities that get into that, not the least of which, of course, is taxes, which is what we're talking about today. So again, if you'd like some help with that, 615-376-5325. Just call the office. We'll get your information, send you out a checklist of things to bring to your appointment with me. And when you come in to see me, I'll also give you a free copy of my book, 7 Steps to Financial Freedom in Retirement. Okay. The ordinary income tax rate, so let's start there. We'll get up on the screen the 2022 ordinary income tax brackets, and this gives you an idea of both what the brackets are as well as the standard deduction. Right,
which I think a lot of people forget. We have that 10% tax bracket, right? We go from 10, 12, 22, and that's the biggest jump, is when you go from the 12% to the 22. And that's for an individual if you make around 50, around 50, because it says 41 plus the standard deduction, which would be about 53,000, and a married couple around 100,000. Once you get over those thresholds, you go from basically 22, and we're in a progressive tax code, so keep in mind it doesn't jump like immediately over, but you go from 12 to 22, and then from there 24, 32, 35, and 37. But I really think that's always where you go from just that one, middle income, and then you make that huge jump, and that jump really can affect your tax dollars. It makes a big jump for individuals. And then,
this is where people a lot of times, I think, have a misconception in understanding that progressive nature is that if you're just because you go over into 22, it's only the amount. So if you're right now for an average couple age 65, okay, you pick up a little extra on the standard deduction. So you're going to be at about $112,000 for 2022. Right. If you exceed 112, in other words, you're going to bump into that 22, but you're only going to be taxed on the amount that goes over at 22. So everything else is still at those lower brackets. So if it's 112 and you make 120, it's not all 120 that becomes taxable. It's only that $8,000 difference that we're looking at. Again, they're not going to jump right in and take the whole dollar amount for you. It's not retroactive to where you're going to pay 22% on everything.
Oh my gosh, I'm at the 22%, so I pay 22. There's an effective rate, and many times those effective rates, even if you're over a little bit, it could be closer to 16 or 17 overall, your true effective rate.
And this is,
understanding that though makes a big difference on how you take your money out, right?
And exactly, and this is where, when you get to the age at age 72, when you're taking required minimum distributions, we look at ways when we're planning for that age, before that time, we start thinking ahead, you know, when I get to that point, so I can factor in, for instance, I can calculate how much your money's like, how much those accounts are likely to grow over the next, how many ever years it is before you hit 72, then determine how much your RMD is going to be, that required minimum distribution that you're going to have to take out. Right. Then we can determine, okay, is that going to bump you into a higher bracket? And if so, if we do some Roth conversions now in the lower bracket possibly, right, to avoid going into a higher bracket later. So we might, in a sense, we're paying a little extra tax as far as the total dollar, but the percentage is still going to be at that lower percentage amount. Right. And that keeps us from paying a much higher percentage later. Just talked to a gentleman this week, of course with tax time we're getting into this a lot, and that was one of the things. If he's now able to take his RMD this year, however, we have the option of, for his first year, of going April 1st of next year to take that RMD. In his situation, now that means taking two right. next year, one for the 22 year and one for the 23 year. However, in his situation, he's got wages this year, which he won't have next year. Right. So it was actually going to cause him to pay a much higher tax over the 2-year period if we did his RMD this year rather than wait and take 2 next year. This, again, is one of the reasons why you really want to sit down with someone your tax professional, investment person, and have them help you, right, determine for you what is the best time to take your RMDs. Is there anything we can do to reduce those the taxes right. on those RMDs down the road? Because
I know we have clients, sometimes you're able to convert for almost nothing, and then other people, we don't even bother. We just kind of keep their taxes low for a few years because you know that the RMD is just going to be so large. It does, we'll go ahead and take advantage of a lower tax period because yep. there's certain things. But each person is kind of unique, I mean, in that way, of what's going to work best, and depending on how much money they actually have and all that, in the different accounts.
Well, in fact, here's one. This next slide shows you how taxes are calculated. So it gives you an idea of the difference between what the tax bracket is and your effective tax rate, your marginal tax rate, which is your bracket. So look at how taxes owed are calculated. And this is one where you get to see, for instance, that the standard deduction, in this example, they're using the 14.7 for an individual.
So she's over 65 in this example, correct.
There you go. And so that first $14,700, zero tax.
Right.
Then you've got the next $10,000, $10,275, taxed at 10%. As you can see, that's $1,028. Right. So basically, there on the left, it's going to. Well, we're actually missing that one on the tax owed part. But then the next, let's see, about $30,000 is taxed at 12%, and so on down the line. But so you can have. I'll give you an example that I use more than this one even is an average couple age 65. Again, $112,000. If you break that down, they're in a 12% tax bracket, but their effective rate, if they maxed out that 12% bracket at 112, would be more about 9%.
Right.
And so your effective tax rate, now when you jump to that next level, if you had $50,000, for instance, taxed as 22, that of course is going to increase your effective tax rate as well.
And in the example, which doesn't show up there, but this person made 150 and being at 65, sure, her tax rate would have been, oh, there you go, 24%, but the effective is 17.5. Yeah. So you see the difference. I mean,
that's
a great example.
A great way to show you basically the difference between your tax bracket and the actual effective tax rate when you blend all that together. All right, we're going to take a break. Join us here. When we come back, we're going to get into the 3 categories of retirement income and how they're taxed. Yep. All right, but first a break. Join us here. We'll be right back on the Retirement Report.
Hi, I'm Michael Ponce. The people of Tennessee have a rich history of helping others. At Ponce Law, we help our clients by gathering the facts, hiring experts, accident reconstructionists, and anything necessary to get you the best possible recovery on your case. Ponce Law makes it easy. Just call for a free claim evaluation. We'll advise you if you have a case, and if we can help you, we will. So call now.
See how your business can earn the competitive advantage of accreditation. Visit bbb.org. You've been smart and saved for your retirement years. But now what?
It can be an overwhelming puzzle to see the big picture, but it doesn't have to be. I'm Hank Parrott of Estate and Financial Strategies, and I can help you thrive in retirement, not just survive.
Estate and Financial Strategies can help you maximize your wealth while